Welcome to Options in Plain English. Today we'll be talking about intrinsic and extrinsic values as they relate to option prices. An option price is made up of two components, an intrinsic value and an extrinsic value. What are these values? Well, the intrinsic portion of it is what we would be considering the real value that an option has. So for calls is when the current price is above the strike price, that would be the difference between the current price and the strike price would be the intrinsic portion of it. And for puts, it would be otherwise. So any strike for puts, the strike prices that are above the current underlying price would be the ones that have intrinsic value. So it would be the difference between the strike price and the current underlying price. So for example, if we had a stock that's trading at $30, the $20 call would have $10 of intrinsic value, and the $40 put would have $10 of intrinsic value. So because of this, it's important to understand that only in the money options have intrinsic value. At the money and out of the money options don't have any intrinsic value. Extrinsic value is likewise any value that is not intrinsic and that is in the option price. So for example, if using the same example, if we had a stock that's trading at $30 and the $20 call is trading at $12, then we know that we have $10 of intrinsic value. So the remaining $2 would be the extrinsic value. This value is also called time value. So some traders refer to it as time value because at expiration, the extrinsic value will be zero and the option will only be worth its intrinsic value. So the extrinsic value, the time value portion of the option, as time passes, is going to start going down until at expiration there is no time value left, there is no extrinsic value left. Let's look at an example so that we can better understand these concepts. We talked previously about stock prices being at the money, in the money, and out of the money. We now know that in the money options have intrinsic value and at the money and out of the money do not. Let's take a look at this example. Let's take a look at a stock where the current price is $200, and we're going to analyze the strike prices of 180, 190, 200, 210, and 220. So for calls, we'll have a little table here where we can see the values. So this is the strike price. So we're going to analyze 180, 190, 200, 210, and 220. The option price, the 180 call is going to be trading at $22. The 190 $15, the 200 at $10, the 210 at $5, and the 220 at $2. Right away, we don't need to think about it too much. Right away, we know that options that are at the money and out of the money don't have any intrinsic value. Right here, there is zero value in the intrinsic value column. 0, 0, 0. And for options that are in the money, for example, the 180, the in the money value would be equal to the difference between the current price, which is 200, and the strike price. So in this case, it would be 200 minus 180. It would be $20. The 180 strike price would have an intrinsic value of $10. And so anything that is not intrinsic is going to be extrinsic in the analysis that we're doing here. So the extrinsic value column, for example, for the 180, if the option price is 22 and it has $20 of intrinsic, anything Anything other than that would have to be extrinsic. So we have $2 of extrinsic value. In the 180 strike price, we have an option price of $15, and we know that it has $10 of intrinsic value, so the extrinsic value is going to be equal to 5. The $200 strike price is at the money, so it doesn't have any intrinsic value. It's purely extrinsic value or time value, so it's $10 of extrinsic value. The 210, no intrinsic, it's all extrinsic, $5. And the 220, it has 0 intrinsic value, so all of it is extrinsic, so $2. So notice how the intrinsic value is very easy to calculate. It's just a subtraction. And the extrinsic, we can see that even though we could think that the in-the-money options are going to have a lot of extrinsic value because the overall option price is higher, we can see that the actual extrinsic is a portion of the overall option price. So it's not, it actually, something that's easy to see here is that the extrinsic value peaks at the money and starts going down as you go further and further from the at the money, either on the downside or on the upside. This is something that's critical for you to understand. The extrinsic or time value peaks at the money and starts going down as you go further and further from the at the money. Now let's take a look at the puts, which is going to be a similar analysis. We have the strike prices here. The current price is 200. So these are the out of the money. These are the in the money. So if we start with the in the money, we have the 220 trading for $22. So because 220 from the current price, which is 200, is 20, we know that it has $20 in intrinsic value, leaving $2 only as extrinsic. For the 210 is the same thing. We look at the option price is 15, which means it has $10 of intrinsic value because it's 210 minus 200. So the remaining value has to be extrinsic, $5. The 200 is the at the money, so it has all of its value is extrinsic value. The 190, likewise, doesn't have any intrinsic value, so all you see there is all extrinsic, and so is with the 180. $2 of option price, then $2 of extrinsic. So bottom line, in the money options have intrinsic, out of the money and at the money don't have intrinsic, but pretty much every tradable option with some time remaining before expiration is going to have some sort of time value, and this is what makes an option an option. The intrinsic value, it's pretty much just the value that you're in the money by, and the time value represents the optionality of your option contract. Now, let's take a look at our trading platform. We're analyzing here Walmart, ticker symbol WMT, which is trading at just about $124. So the market's currently open, so these prices are changing as they tick. So let's take a look at Walmart. We pick the May 2020 expiration, and we're going to analyze these strike prices. It's easy to see that in this platform, the out of the money options, in this case, anything that's above, for the calls, anything that's above 124, and for the puts, anything that's below 124, those are here shaded in black. So if we take a look at these and we look at these columns, which are intrinsic and extrinsic for calls, we can see that intrinsic for out of the money is 0. So the whole value of the option is extrinsic value. Likewise for puts, if we look at intrinsic and extrinsic, for anything that's out of the money, shaded in black here, is going to be all extrinsic and no intrinsic value. The in the money options, you can see shaded here in some sort of a purple color, are having some value of intrinsic, which depends on the current price, which is changing, but it's basically the difference between the current price and the strike price and the current price. So 135 minus 124 is just about the $11 that we have in intrinsic. Likewise for calls. For example, this $100 strike, if we're trading at 124, this $100 strike is going to have an intrinsic value of $24. As I was mentioning before, look at the extrinsic and how it's not going from low to high, it's going from low to the highest peak at the money, or the closest to the at the money. In this case, we're trading at 124. So the closest strike price would be 125. The extrinsic value peaks at 125. In this case, it's just about almost $4, and then starts going down again. So it goes from low to the highest to the low. And it's the same thing with puts. Just looking at the extrinsic value, we start low, we get to the peak at the money, or the closest to the at the money, and then we go lower as we get further and further from the at the money. This is all there is to know about intrinsic and extrinsic values. Now that we know at the money, in the money, and out of the money strikes, and we know intrinsic and extrinsic values, we're going to be able to quickly refer to different strike prices, and you'll be able to talk to traders about this and about what an option being in the money means, and what about an option that's out of the money mean. And you'd be able to tell someone who trades that you like buying out of the money options, or buying in the money options, or going for the at the money. So now you have some new terms that are used every day that you're trading options. I hope this was useful, and I hope you guys stick around and hit that subscribe button and leave a comment if you would like to do so. Thanks again, and have a great day. Goodbye.